Joining us from Newsmax New York, Steve Forbes, the editor-in-chief of Forbes magazine, former presidential candidate, and the author of the new book, brilliantly and succinctly titled Money, although he has a more substantial subtitle to that. Steve, we're so glad to have you. Thanks for hanging in with us. And Miranda, you've got a question for our guest.
Yeah, I do. With very limited supplies of gold in the world, and that's why it's so precious, how would the United States accumulate enough gold for a central bank to create a new currency standard? I mean, a lot has changed since the 70s. We're more of a global economy now.
Well, I think that we have enough gold in our vaults now in terms of the federal government, 261 million ounces, more than enough to do a gold standard. The key thing to make a gold standard work is to think of it as you would like a ruler. It simply measures value. So let's say we peg the price of the dollar to gold at, say, $1,300 an ounce. All that would mean is if the gold went above $1,300, the Federal Reserve would tighten up, that is, create less money. If it went below $1,300, the Federal Reserve would create more money, would just keep it at that $1,300 level. We did that in various ways, from time of George Washington right up to the time of Richard Nixon. And it worked pretty well. We led the world, going from a small agricultural nation to a major industrial nation, and we should do it again. Stability means more prosperity.
Well, Steve, you've been talking to us at Newsmax for a long time about more inflation coming down the road here and about the warning signs of a second Great Depression here. But still we are some years on into the Great Recession, a number of quantitative easing measures taken by the Federal Reserve here. Yet a lot of economists point to the fact that there hasn't been any real substantial inflation. I want to get your take on that because you were talking that there already is inflation built into the economy. Please explain for us.
Well, that's right. When the Federal Reserve and with the connivance of the Treasury Department a little over a decade ago started to undermine the dollar, we got the housing bubble. We got oil going from $21 a barrel to about $100 a barrel. So we've already had a real turmoil in the economy here and around the world. And the punk recovery that we've had, the very slow recovery, the slowest in American history, is a result of what the Federal Reserve did with so-called quantitative easing. What it did with quantitative easing didn't shoot up the consumer price index a lot. It did more than the CPI results give because they keep changing the consumer price index. That's why you see more expensive food in the supermarket, more expensive gasoline, but it doesn't seem to show up in the CPI. But the bottom line is what the Federal Reserve did was make it easy for the federal government to borrow, sort of deficits without tears, made it very easy for large corporations to borrow, but made it very difficult by putting pressure on banks to tighten up on lending standards, made it very difficult for small and new businesses to get credit. And those are the entities, small and new businesses, that are big job creators in this economy. So only recently have banks begun to ease up and start to lend to small and new businesses, which is why the economy will do a bit better, but it's like a baseball player supposed to be a batting champion going from a 180 batting average to about 250 or 260. Still not going to get us to the World Series.
Well, speaking of numbers and the economy, Steve, the Obama administration, and I've said, gee, the way they keep track economically is kind of the way they count votes in Cook County, Illinois. But the administration is claiming we're out of the recession. They say non-farm payrolls have reached 2008 levels. They claim unemployment is down to 6%, and the deficit is down significantly. And of course, they're on Wall Street, the stock market hitting record highs. Do you buy any of those characterizations of the economy?
Well, the economy is sort of in the position of a flu. It's not like pneumonia, which is going to put you in bed, but you don't still feel very good. So yes, it's not as bad as it was in 08 and 09, but again, after every sharp downturn in American history, J.D., up to now, we've always had a sharp recovery, and then the question became, could we sustain it? And clearly we didn't get the sharp recovery this time. And even in the 1970s, a terrible decade, you had periods where the economy looked good, sort of a bear market rally, and before we went off the cliff again. And so in this case today, yes, you will get periods where things look kind of calm, things are starting to look a little better, but because they don't know what they're doing, we're going to be in trouble again. It's like in days of old when a patient got sick, they'd bleed the patient. Well, that would end up, and when they stopped bleeding the patient had a chance to get better. Right now, the doctors are, with easing up on quantitative easing, starting to move off from that. We're getting less bleeding of the patient, but they still don't know what they're doing. They're guilty of economic malpractice.
Well, you take a look at this, and again, to just drill down, we've got about a minute remaining in this segment, Steve. The quick assessment of Wall Street and these phenomenal numbers, how long can these numbers continue? Can stocks continue to rise to the record growth we're seeing on the street? About a minute left in this segment.
Well, the stock market's at a nominal record, but if you look where it was 12 or 14 years ago, it is still a very mediocre, poor performance. And the stock market, if we had a vigorous economy and we were on a gold standard, the market today wouldn't be at 17 or 16,000, it would be at 25 or 30,000. So again, we're looking from a very low level of what it should be. And a lot of people have been forced into the market because they don't pay interest rates anymore on your savings. So that's where you get the manipulation.
Well, we want to manipulate a few things with you in a good way, Steve. We're going to have you step aside for a little while. With your kind indulgence, you'll return at the top of the next hour as we want to continue this conversation about your new book, about the economy, and oh yeah, politics. We'll get around to that. Steve Forbes, you're great to join us. When we come back, one of my old congressional colleagues, Ted Poe of Texas, to talk about the situation on the border. That's up next on America's Forum.